In the UK, the Bank of England is about now announcing its final monetary policy decision of the year, but expected to hold rates steady. Let's bring in Juliana at this point to tell us what is happening there. Hello, Juliana. Good afternoon.
Good afternoon.
Now, it was reported this morning that hedge funds eavesdrop on Bank of England's press briefings. What exactly do they want to hear, particularly on the interest rates side? I guess that decision has been made at the moment, right?
Hi, Jimmy. Well, I'm locked in the studio, but I presume, yes, the Monetary Policy Committee have made a decision on interest rates. I don't know what those are, but mostly it's presumed that it will be 0.75% and stay at that rate. Going back to the initial story about the hedge funds, what do they want to hear? Well, what they want to hear is exactly what everybody wants to hear, which is just money moving information from the Bank of England Governor Mark Carney. The Times, the UK British publication, reported earlier this week that hedge funders were snooping in on these press conferences. So what typically happens is they have their meetings and then they pre-record a press conference. Now, it's usually Bloomberg that are overseeing the visuals of this, but there is a third-party supplier that looks after the audio, and this third-party supplier has been selling this audio information to traders who work for Market News. Sometimes they could have this information an hour beforehand. Sometimes they could have this information just a couple of seconds beforehand. But having this type of information, particularly if you work in the city, is just so valuable because, of course, you'll be putting out reaction before the rest of the world hears it, and you can sell this reaction. So the money watchdog here in the UK, the Financial Conduct Authority, are involved. The Bank of England have flown them in, and we're likely to see how this is going to drag out in 2020, but particularly embarrassing, especially as it's been going on for so long. And it's showing once again that, traders have to be very, very highly regulated because they're desperate to move markets and make money.
Well, Juliana, just as you said, this certainly gave an advantage to high-speed traders, just currency speculators who can make millions of pounds on tiny market moves. So what's happening to the pounds at the moment? And, of course, we would like you to lead us into the equities market as well.
Well, yeah, starting with the equities, the FTSE All-Share at intraday is up 0.05%. The FTSE 100 is up 0.02%. The FTSE 250 domestic market, that's down 0.10%. In currencies, the British pound is up, but still not up on the high we saw last week. It's up on the US dollar by 0.16%, down on the euro by 0.08%, and up on the Japanese yen by 0.17%.
All right, looking at the latest UK retail sales data this morning, it looks like early November discounting and Black Friday sales could not help boost consumer spending, right?
Well, it's interesting, actually, Chimmy. This retail data is down. Yes, it's down. We had a flat reading in October. In November, it's come down at 0.6%. But very importantly, it doesn't take into account that Black Friday. Black Friday was a little bit earlier this month, which was on the 28th of November. This data that's been released this morning is from the 27th of October to the 23rd of November. Of course, the fact that it's a decline, and this is the fourth month of decline, is still very, very bad. In fact, economists are saying that this is the longest level of decline since 1996, which shows just how bad it is. But Black Friday, which is expected to have pumped billions into retail sales, hasn't been accumulated. So very bad news for November. But hopefully this time next month, when we're talking about December's rates, those Black Friday, Cyber Monday sales will be accumulated into the results.
And, of course, let's see how the sales for Christmas can actually help boost that data next time. Thank you, Juliana.
Thank you, Chimay.